G'day everyone, welcome back to another episode of the Australian Property Investment Podcast. I'm super excited because we've got a guest in here today that knows a lot about properties, been in the industry. You wouldn't know it by looking at it, but been in the industry for quite some time, but has collected a wealth of knowledge, has an amazing network as well, and is very well versed in space because you've got your own podcast, which absolutely shoots the lights out as well with our good mate, Chris Bates. Veronica Morgan, welcome on. How you doing?
Oh, thank you, Aaron. Great to see you.
Yeah.
Nice to be on this side of the microphone for a change.
Yeah, how does it feel?
Well, I don't know what you're going to ask me, so I guess I'm slightly nervous now.
Yeah, you put a bit of empathy there, what your guests go through.
Yeah.
I love what you guys have done. Obviously, a huge amount of respect for you guys personally and professionally. Yourself, Chris, and I know your business, Good Deeds, has really set a very high bar when it comes to buyer's agency, which is a question I'm going to have for you later in terms of the industry and unpacking that a little bit more. But in true Australian property investment podcast fashion, I'm going to ask you to start off a little bit about yourself, your 3 Ps, a little about yourself personally, professionally, and your property journey to date.
All right. So personally, do you know, my name actually, when I discovered what it means, it actually means true image. Like Veronica is a derivative of vero, which is actually the Italian word for truth or truly, and that obviously comes from Latin, right? So when I discovered that, it was like, oh wow, that's so bizarre because my whole life I've really struggled. Not to say I've never lied, you know, I'm certainly not holier than thou, but all of my life I've really struggled to lie, and you know, which is sort of weird that I ended up in real estate as an industry when you come to think about it. But it's sort of when I realized what my name meant, it's when I look back at my whole childhood, everything about me, all the ways that I'd get in trouble often was because I couldn't bullshit. And so, you know, and that continues to what I'm doing these days, really. So I'm sort of like the anti-bullshit or the bullshit-free zone. And so that's personal, and that's something that it comes through in my personal values, but also in terms of my choice of industry and how I go about the industry, you know. So for me, it's intrinsic. It like those 3 Ps are sort of all part and parcel of who I am. You know, I can't separate any of it. So what would you say? Personal, professional, what was the other one? Property.
And professionally, I mean, you've had a career that's gone through media, for example. So I'd say this isn't a new concept for you. You've been on TV, for example. So you've been around real estate, media, sharing your advice and your opinion, which I think you said comes freely. I think that's when people meet you, you're not afraid of expressing your opinion. And it goes,
no.
That's super respectful. So I think you need an opinion when you're in the space that we're in, right?
Look, you do, but everybody's got one. So there is a bit of a problem with the amount of opinions that are out there about property, and there's very few opinions that are really backed by evidence. And I guess I've gone through, I guess, a bit of a roller coaster of that strength of opinion or willingness to give my opinion, in that early on I certainly was more opinionated, and then I started learning more and started becoming less opinionated, you know, and thinking and recognizing, oh, I actually don't know. And certainly for example, when I started in buyer's agency, now that's like 17 years ago. And, you know, you get contacted back then because it was easy to get media back then because there were no buyer's agents around, you know. And, you know, they'd ask you what's your top 10 tips for suburbs to buy and all that sort of stuff. And I started going, I'm not really sure I'm qualified to answer that because, you know, I can talk about my area, but I don't know anything beyond my area. And so, you know, it's that sort of idea that once you start gaining more knowledge, then you realize what you don't know. And so then I sort of went through this period of like, I'm not gonna volunteer anything because I actually don't know what I'm talking about. Then I got onto the television show Relocation Australia, and then Location Australia. And then I start getting exposure to markets all around the country, and coming at that from that position of I don't know what I don't know was the best way to come at that, I can honestly tell you, because then I start learning about asking good questions and learning how to research an area. So I knew enough to know what I didn't know. And I think that's the importance there. And certainly in terms of back to that truth, you know, I came at that by saying, then you're a real estate agent who gets an opportunity to become a television presenter. So you have an opportunity to go, oh, do I put a different persona on when I'm doing this role? And for me, it was very, very clear and easy to say, no, I bring myself to the table, exactly who I am as I am. And I'm so glad I did that for lots of reasons. One is because then I didn't have to sort of try to remember the act, and I can just be who I am the whole time. But secondly, if I was to be rejected or fail, if you like, in that scenario, I've failed being who I am, not pretending to be somebody that I'm not, and then thinking, oh, but there's all these other people I could have pretended to be and I didn't choose the right one. I just sort of much rather be rejected or fail for being myself and bringing myself to the table.
No, well said. Well said. And yeah, I feel like that true, authentic self. Every time we've met, I'm like, what you see is what you get. And I think when you're talking with your clients, being around for this long in buyer's agency land is obviously a testament that you're doing an incredible job. That's not blowing any smoke, but it's obviously good businesses stand the test of time as well.
Thank you.
Awesome. Now, I know that you've got your book out, which is Auction Ready, and that's one of the questions I've got for you. Loaded question. Does it surprise you about how many people go to auction for the home that they want to buy or investment property and they haven't really attended many, if any, auctions beforehand?
I'm always astounded at the amount of people that confess to me after having bought their first property that the first ever property they went to was the one, or first ever auction they went to was the one that they bid on for themselves.
Is it beginner's luck, or is I don't know what, or is it just I don't know? They just see the property and they fall in love, and it happens to be going to auction. Like, what happens here?
Look, to be honest, a lot of buyers actually want to avoid auction. They do recognise that it's it's a stressful, high pressure environment, and so I think, to be honest, what feeds into some of the reasons why perhaps they haven't been to any other auctions is because they've been trying to avoid it up to that point, and they haven't sort of thought through. So they didn't go in with any sense of positivity necessarily. They've just gone in hopeful. And in fact, I watch people at auctions all the time and I see that hopefulness come through time and time again. In one example, which is a classic mistake nearly everybody makes at auction, in that they set their limit by according to what they hope that they might get the property for, not what they will be prepared to pay for under competition, under duress, right? So then they actually start making those decisions literally under duress. In the middle of an auction, they're trying to work out, should they continue bidding? Should they stop bidding? Is that fair to pay that price? Is that a real bidder or not? Like, all that stuff is going through their mind. And of course, they're never going to make nice, clear decisions when you've got all that stuff going on in your head. Yeah. And if they'd just taken the time to go and observe more auctions, potentially they might have a better sort of understanding of what they might be in for.
Yeah. If someone's going to auction and you just said that they bought at auction, so they've done something right, but then you're going, look, as a, yeah.
You could argue that they didn't.
Successfully, they've bought the property or whatever. If they've overpaid, they're none the wiser to it, right? They've got the home that they wanted.
What I should say is actually they didn't all buy. I'm just the amount of people that the first time they ever bid was at the first ever auction they went to, and they didn't necessarily all buy those properties. But I mean, you could argue that if you buy, then you've succeeded. And in fact, it's interesting because there was one buyer's agent out there, and probably more than one, that claims 100% auction success rate. I'm like, wow, that's interesting. That means 100% of the time you have paid more than everybody else. And you're banking on that being the right thing to do and 100% of the time, when it isn't actually always the right thing to do, because some people are prepared to pay way more than the property should be, you should spend on the property. So therefore it's an interesting metric, So I, the word success when it comes to property, it's a bit loaded. People just think buying it is success. It's like, well, there's a lot of people that own a property for 10 years and they don't make any money. Is that success? No. So
someone's going against you. So let's play this scenario. Someone's going against you. What are you doing differently? Because you've got so much auction experience under your belt. What are you doing differently to prepare?
Yeah.
Prior to, on the day of, for example, that sets, I guess, you with your experience apart from the uninitiated person.
Yeah. Look, When you're buying a property, you've got to realize that there's what's called information asymmetry. And what that means is that the agent knows a hell of a lot and you know nothing. All right. So you walk in the door, like that's the first time you've seen the property. B, it's probably it might be the first time you've met the agent, may not be. But everything for you is a series of firsts. And then you're going to look at the contract for the first time. Then you're going to try and work out why is the vendor selling for the first time. Then you're going to be trying to work out, well, how many other buyers are there for the first time? Then you're going to be thinking, well, is there enough vendor disclosure, or is there something that is missing that I should discover, that the vendor knows about this property? Other buyers may or may not know about this property, that I don't know about this property. There's all this stuff. And so I liken it to, when we as buyers agents walk into a property, even before we walk into a property, we're looking at, it's like a blank jigsaw puzzle. Right, we've got a pile of pieces. We might not have all the pieces, right? We've got some pieces, and we start piecing them together to start making the shape of what that puzzle looks like, right? With our experience, we can make assessments as to what the missing pieces are likely to look like and where to look for to find those missing pieces, right? And then sometimes you get the missing piece and it looks totally different to what you thought would fill in that bit, right? But it's that knowledge of what should be there and where to find it. So what information do we need? Where am I going to get that information? And then if that piece is missing, we go in with our eyes wide open, assessing that risk around that missing piece. And so when we go to auction, before we even get there, we have done full pricing research. We also know we've done all of our due diligence. We've gone through all the vendor disclosure and all the stuff that vendors don't have to disclose as well. We can talk to what pieces of the puzzle are missing. So our client is fully aware of all that. We've made a recommendation on pricing based on evidence, based on market, based on the caliber of the property, based on a whole bunch of factors. They can make a decision as to where they're prepared to go to for that property under competition. And then in New South Wales, you register to bid at auction. And now you don't have to register in every single state. So Victoria, you don't have to. Queensland, you do. South Australia, you do. There's hardly any other auctions anywhere in the country, so don't worry too much about that. But so we know when we go to auction, we get there early enough to watch the registrations. We want to see how many people are there. But before we even get to that point, we have a hypothesis because we've been filling in that jigsaw puzzle. We go, right, well, we think this is what is going to happen. We think there's going to be X amount of buyers, right? Or a lot of buyers or not many buyers or for whatever reason. And that could be because we're interpreting what the agent has said. Some agents, we might be able to believe what they tell us. Others, we're going to have to interpret. We also know what the agent is quoting versus what we believe it's worth. And what does that say in terms of how much interest they're likely to have generated for that property? And so there's lots and lots of clues that from our experience, we bring to the table and go, this is likely going to be the scenario. We're going to have this many people register. It's going to be competitive or not competitive or whatever. Then when we get to that auction and we're watching the people register, we can check what really is happening in front of us versus what our hypothesis was. And so then we go, right, we're on track. It's panning out exactly as we thought, or it's not. Now, if it's not, we've got a whole toolkit, if you like, of lots and lots of different resources that we can draw on because we've got loads and loads and loads of experience here. And we can say, okay, we were going to do this. This was going to be our bidding strategy. However, now we're going to change because the circumstances are different. So we will bid whether we open the bidding or whether we sit back, whether we open it high or we open it low. There's lots of things there. We'll be looking for a vendor bid, for example, to see are they going to use one, and if so, at what level? What does that tell us? Because the vendor bid can tell if they use one, can be very telling, right? So there's lots of ways that we interpret what's going on. We watch the bidders. A lot of people just watch the auctioneer. We're watching the other people. I want to see signs that they have reached their limit. And the auctioneer is doing exactly the same thing. And what the auctioneer will do with that information is different to what I will do with that information.
And I want to know that someone's reaching a limit just out on that point. Right?
There is one really obvious thing that people do, and it's so interesting. I see people, they bid very, very confidently and they're very poker faced. Yeah. And I think, wow, they're good. And then even the best ones usually give it away when they've hit that point where it's beyond the point where they wanted to pay. Okay. And you see it in their face, you see them suddenly talk to their partner, they will give something away and you go, all right, got them, I know where they're at. And so then I know okay, that person, I need to bid differently to try to dissuade them from trying to continue, right? The auctioneer is going to want to go, okay, they're at their limit. I'm going to try and get them to stay in with small bids. I'm going to entice them to feel like $1,000 bid's going to buy it because I just want them to keep pushing that other person over there I reckon's got more money. And that's what the auctioneer is going to be thinking. I'm thinking, I don't want them to be enticed to continue bidding. I'm not going to let them think $1,000 is going to buy it. That's a time where I might scare them off, So, and once again, it depends on how many other people are in the room with that I've picked that up from, So that's one example. But yeah, that is a classic. I see alpha males, which just crack me up because they rock in with the swagger. And then it's like, you just gave it away. You just showed me your soft underbelly.
I love it. And the other part that I tell a lot of our clients when they go to auctions, do your research. A lot of these auctioneers will put up on Instagram or YouTube, for example, they're putting up various auctions. So if you don't have the ability on Saturdays to be there physically, digitally at night time, you could be doing your research, which is like gold to tell you how the auctioneer is going to run the result, run their on their day campaign as well. What about in the lead up to an auction? Because like you mentioned before, most people want to try to avoid auction where possible, which means they're going to go in and leaving it kind of to the last week is a challenge because they might go, look, we're this close to the auction, we're gonna go on the day if there's enough interest. So what are you doing prior to auction that can seal the deal?
So here's the thing. A lot of people want to avoid auction, and so then they will go in with a pre-auction offer, but they often don't realize they're doing it to avoid going to auction because they fear the auction. They're not thinking about it strategically. Right now, so if you make an offer prior to auction, you've got to have a very good case for doing that, in my view. There are times when it's actually better for the buyer to go to auction, right? Not always, but there are. And so I think not assuming that it's always better to buy prior, that's a real danger. Okay. And so, for example, when you go and you try to make an offer prior and it's competitive, every other bid or fake bid, right, is behind closed doors. You don't really know whether they're real or not. Whereas you get to auction, notwithstanding dummy bidders, there's a lot less of those around these days than there used to be. But, so there's few. Let's assume there's no dummy bidders around. You can see the person that just made an offer against you, right? There's a lot to be said for transparency. And I think a lot of people that get themselves into a pre-auction bidding scenario haven't really considered that. And then they're in it. It's too late. Once you're in it, it's like, oh God, now I've got to deal with this, nightmare. Yeah. So you've got to be very aware of that. So the other thing too is you've got to be thinking when the agent can sometimes throw you a lifeline and be saying, they will engineer the offer. They'll give you the opportunity to make the offer and you'll be relieved, if you really want that property. But if they're giving you the lifeline, I'd be having to question why. Remember that jigsaw puzzle where they've got all the pieces and you don't have anything filled in? Well, when I'm filling in that jigsaw puzzle and I'm thinking to myself, you know what? I don't think they've got as much interest as what they want. That agent, when they know that you're the strongest buyer, i.e. that there's daylight between you and the next buyer, or you're the only buyer, and they come to you and they want to encourage you to make a pre-auction offer, I'd be worried. So I'd be holding back. I do whatever I can to hold back when the agent is trying to agitate for an offer. However, that's not always possible because if there are a few people there and the agent's just fearful, they might actually agitate someone else to make an offer and all of a sudden it's on anyway, right? So you've got to be mindful of that. But that's one thing that I think that, when people are in too much of a hurry to buy it prior and they think that that's the better scenario, it's not always the better scenario. And the other thing too is that, your timing, like you mentioned, if you leave it to the last minute, well, there is an optimal time to try to buy a property prior if it is the best thing strategically, and that is in the middle of the campaign. Too early is, the agent and the vendor just haven't had enough feedback to really make a good decision. So you're going to have to pay big premium to buy it in the first week. If you're in the third week of an auction, then everybody else is going to be in a position to be able to compete with you because people do tend to often leave it to the last minute. So therefore, in the middle is sort of like optimum. It's when the agent, the vendor have got enough information to make a call on that, and not every single buyer that potentially could be interested in the property has actually been in a position to get themselves ready to bid. So if you're going to do it, that's optimal. However, I really caution against taking me and say, right, that's it, I'm going to try and buy every property in the second week, because that's naive.
Yeah, definitely. The price guides, and this would probably be everyone's bugbear at the moment, where price guides start and then when the ultimate sale price kicks in, like that seems like a massive disparity. And forget like the ethical side of it. I feel like that's a whole separate conversation which we don't want to divulge in. But how are you then unpacking that for people that are coming to you as a buyer's agent going, we keep missing out is one. They're selling for well over what the price guide was. How are you navigating that discussion to go, well, I was never going to sell for that anyway? You always had that little loading on top.
Look, a real mistake that a lot of buyers make is that they compare a property that's on the market with others that are currently on the market. And so they look at what they're all guided, and everything is underquoted. I mean, to varying degrees. And even the legislation allows for underquoting, right? And so if I explain that, every single state and territory has legislation around underquoting. I think South Australia has the tightest and the best, I think, in terms of buyers. But certainly, and Queensland doesn't. You're not allowed to quote at all. So, so there's legislation, all right. It actually prohibits quoting a price guide. So, the two main auction areas are Sydney and Melbourne, and the legislation is somewhat similar in both states, and that is that the agent gives the vendor a guide as to what they believe the property should sell, within. There's a 10% range on that. So if they, for example, there's two prices, a range. The lower price plus 10% is the maximum breadth of that range or stretch of that range. So if the agent said 1, it'd be 1 to 1.1. If it was 1.1, it'd be 1.1 to 1.21. So that is the tight range. Now, in both states, there's legislation around how they're meant to demonstrate that research, et cetera, et cetera. They don't all follow that, but there is guidelines there. And then the agent cannot quote less than the bottom end of that range. So it's the law. So say they put 1 to 1.1 on the agency agreement, and the vendor could say, I don't care, I'm not selling for less than 1.5, right? And they're not bound in any way to sell in that range, right? So the agent, as long as they've signed the agency agreement, whatever the agent's put on the agency agreement, the vendor, they can then turn around and say, I don't care, I'm still going to set my reserve at 1.5, right? So the agent has got these requirements. Now, in that campaign, so they're quoting $1 million, and then someone comes in and says, I'm going to offer you 1.1. They take it to the vendor. Vendor says, no, I'm not selling for that. And so the agent comes back. They have to increase their quoting. They can no longer quote less than 1.1. So but you will see certain behaviours that some agents will do, things like discourage you from making an offer or claiming it's not actually in writing, if it's not a real offer because it's not in writing, or the vendor said, no, I don't want offers, and so you can't submit one. So like, stick my fingers in my ears, I don't want to hear it. So there's some shenanigans that go on, but there are agents out there that follow this and actually do it properly. There's also times when the other option they can do, if they had an offer that they don't want to quote that price anymore, they'll just take the guide away. So there's a hot tip for any buyers. If there's a property that they're looking at, there was a guide advertised, and then there's no guide advertised, that is because an offer has been rejected and it's higher than the agent wants to quote.
Okay, good to know.
So the agent always has the option not to quote. Okay. So then they'll have a verbal conversation with buyers, and there'll be some reason why, blah, 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 whatever. But anyway, so that's how they sort of manage that. So what we say to... And we have tracked, over the years, I've tracked sale prices to price guides, and there is no uniform. We can talk about this 10% range, but there is actually no uniform disparity between guide and sale price. No, and even I thought, I was going to be so clever and I'll track individual agents and I'll be able to work out the averages. There is no uniformity to the actual number. There is uniformity in terms of agents who follow a particular pattern of behaviour, and they are, they're chronic underquoters, for example. But I still would say, look, that one sold for 33% more than they guided. That one only sold for 10% more than they guided. If you run out there and go, right, well, they always quote 20% under, and you add 20% to whatever they guide, you'll be overpaying some of the time. Other times you would be under-equipped and under-prepared. So the only way a buyer can counteract this is to literally just take that as the first piece of information that you get, shelve it, make your own mind up on price by doing your own price research and understanding values and the potential sale price for that property by your own research and your own market understanding. And then you can revisit what's the agent guiding. Are they underquoting? Are they quoting too close to the mark? What are they doing? You know, and then that feeds back into our jigsaw puzzle, because then we take from that clues as to how much interest will really be in the property.
Yeah, thank you very much. Super, super helpful. I mean, that's where the buy. I feel like that's where the pain point of the buyer's industry, it seeks to resolve, which is this price friction. People going, I just can't seem to get in the market. My price guidance and my price expectations versus what it sells for keeps eluding me. And you and I probably see this all time and time again. There's this anomaly for house prices, and you go, maybe these people just got so sick of the search and just paid whatever what to take that pain away. And it was like, just offer well and truly, significantly above, so we make sure this is ours.
You can see that in a hot market. And when we do our pricing research, because we're very rigorous in how we do that, we range it in a spreadsheet. We stack it from inferior to through superior so that we can really see where the subject property sits, but we also index for market movement. So there are certain sales that, because we know our local areas, well, this is why it's so important to be a local specialist to really understand which of those properties really were outliers in terms of their sales result. And we can see sometimes even in a rising market, it can take 6 months for one particular property for that actual price to sort of come back in line with market values. And yeah, so it's really interesting to see that they stick out like a, I don't know, but like the proverbial. They really do.
Oh my God, that.
Yeah. And knowing the backstory as to why that one outsold, scarily enough, sometimes these properties actually sell and the buyer's agent was involved in the sale and the purchase. And this is something that is really alarming me, because not all buyer's agents know how to do pricing research. They don't know how to work out really how to properly price a property. And some of them are too heavily incentivized for, back to that word, success, to succeed in purchasing the property. And that actually rewards behavior that means ultimately that they encourage their clients to overpay. So when a buyer's agent bought a property that sticks out like dog's balls for 6 months, that's really, really alarming.
Yeah, let's go there for a second, because I know our paths have crossed with PIPA, so that's the industry body for buyers agents and property advisors as well. You've been heavily involved with PIPA. You've seen the members come and go. How many buyers agents are there nationally, do you think?
Good. Look, best guess is around about 3,000.
3,000.
And when I say best guess, that is because nobody actually knows. The licensing regime in every state and territory basically means that a buyer's agent has the same license as a real estate agent or a property manager, and there's nowhere to distinguish them.
Okay.
So and while I'm at it, that licensing process does not teach buyer's agents how to be buyer's agents either. So there's this sort of fallacy or mistaken belief that buying is literally just the other side of the coin to selling. It is not. There's a hell of a lot more involved that a buyer's agent really should understand that is not covered in those licensing courses. Yeah. So you can have a license, you can be a buyer's agent, and in some states you can actually be one without any experience whatsoever, and you can actually be none the wiser as to the things that you need to know and understand to be a buyer's agent.
Yeah, and I'd probably see an explosion of buyer's agents in the last few years. There's no secrets around. There's a course that comes out that's pumping up buyer's agents. We get calls from all the time. Whatever doesn't work, and it's almost like the fly-by-night brokers. 18,000 brokers with a very low barrier to entry.
Yeah.
And it's a classic bell-shaped curve of like who, the 80-20 rule, who's doing some exceptional work on top of their game versus a very long tail and like less regulations. There's no way to decipher. You and a brand new buyer's agent tomorrow could look the exact same. There would be very little to distinguish besides your 17 years of experience and the tens of thousands of properties you've bought in that time. to an outsider looking in, you're both qualified buyers agents. And
Exactly.
there's no way to distinguish between a senior or established or experienced buyers agent. You can
Mm,
market yourself the same, right?
yeah.
Yeah.
And the scary thing is that, it's that you don't know what you don't know. And these buyers agents don't even know what they don't know.
Mm.
Like to give you an example, I mean, I've got a mentoring program, which I started at the end of 2022 for new buyers agents because I could see this proliferation of new entrants to the market who really they just don't know what they don't know. And I've got a Facebook page that for I want to be a buyer's agent. They come in and I do a monthly meetup for these people. And some of these people, they're looking for shortcuts to become buyers agents because they're enthusiastic, they love property, they're excited, they want a career change, they want to dump their day job that they hate, they want to do something they love. And there was one guy that was in the last meetup, for example, and he's helping somebody buy an apartment in Melbourne. And I said, just a simple thing. I said, do you know the difference between stratum title and strata title? Stratum, strata. And he just looked at me blankly, no. And I went, well, you better go and find out, mate. Because it's alarming and scary that you are out there helping somebody buy a property and you don't know that.
Yeah.
And that's just the tip of the iceberg, So it horrifies me, really. And
Yep.
most buyers wouldn't know because they think, oh, they're qualified.
Yeah, it came to a recommendation. They've helped someone else, and yeah,
Mm,
again, there's no way to vet knowledge as well, right? Especially when you're
mm,
buying, it's a service-based business. There's no way actually to have that level of benchmark unless they've got proven experience and they're an
mm.
industry champion. That takes time as well. And again, you probably see this being involved with people. There's buyers agents' behaviour, and I feel that's coming to light, and it's something that I know that you care deeply about. Like we
Mm,
care about our broking industry, you care deeply about your industry because a rotten apple can spoil the batch, right?
mm.
So, what are you seeing great buyers agents do? What do you see mediocre in terms of the diligence, the research, the depth that goes into buying particular markets? For example, what are the green ticks, and then what are the red flags for someone that's looking to engage a buyer's agent?
Yeah. For anyone who's looking to engage a buyer's agent, I say look for three things, right? You need to look for local experience. Now, there are a lot of buyer's agents, and there's a lot of very good marketers out there telling you that you should buy borderless. And that's okay to buy borderless, right? And what that means is that don't be wedded to buying investments in a certain city or town or whatever. That's fine, but don't go with a borderless buyer's agent. Go and find a local specialist in whatever area you decide you want to buy in. And the reason for that is because anybody who is borderless cannot possibly know enough about that area to help you avoid buying a dud. And in fact, these days, borderless buyers agents aren't even inspecting properties. And it's just horrific. I talk to sales agents and property managers across the country about what they're experiencing and dealing with these buyers agents that don't even hit the ground. And the sort of stock that these people are buying for their clients is horrific. Those clients will not be better off for using these buyers agents.
Yes.
So that's the first thing, a local specialist. Now, even then, why a local specialist? Why is that important? It is important because buying in an area is one thing, like choosing a location. There's loads of great locations to invest in. Honestly, there's no magic sauce here, right? There's some bad locations, yeah, but there's lots and lots and lots of good locations. So what you're wanting to do is buy the best possible asset you can afford within your budget. And so some of that's going to be a location, and some of that is going to be within that location. What is a better asset? And so local expertise is required to be able to help you identify the better asset. And every single area, yes, you'll have a median growth rate for an area, but you dig beneath the numbers and you'll see that within that median, 50% will underperform it and 50% will overperform it. That means that half the properties that you could buy throwing your data at a dartboard would underperform the median for any given area. This is just numbers, right? It's fact. I want to be buying something that's going to outperform the median, not underperform.
Mhm.
And if you do not know the local areas, you do not know the dynamics in those local areas, what drives prices, then in the long term, then you run a huge risk of buying an underperforming asset. And so that is something that is really important. So local specialization. The next thing that you want is someone who's experienced. And I'm not talking about, oh, I've got 3 years experience and also I've owned property and I built my own investment property over 20 years. That's not the experience I'm talking about, because you could have been running on a really bad thesis and not been properly benchmarking your own property portfolio. And people would look to you as being an expert because you have all these properties, but it could be a portfolio full of shit. If
Mm.
you've been a professional and operating in the market professionally, you're going to know and understand cycles, and you will also know how to properly benchmark property performance. And so, what you want to know is someone who's got a good 10 years experience. And if they themselves don't have 10 years, they are working within a team where they're under the guidance of somebody in that team who has at least 10 years experience, because you want people that have gone through up cycles and down cycles. In an up cycle, everyone's piling in. Everyone's piling into Perth at the moment,
Mm.
and in an up cycle, they overpay for everything, right? When things go bad, you want the sort of property that will still be able to be sold and will actually have some growth in it, right? So that's the other thing. And the third thing is their due diligence process. Do they care enough about their clients to go to the extra lengths to really dig into that individual property and whether or not you should buy it? Not just ticking boxes, but this is about understanding what vendors have to disclose and knowing what to look for. Back to the jigsaw puzzle, knowing where to look for the information that is not voluntarily given to you. And in different states and territories, that is vastly different. Like Queensland, for instance, and WA and Tasmania, you get bugger all information. You get bugger all time to organise yourself as well. Whereas the other states, the vendors have to give you a certain amount of information. Then you've got to know, how do you interpret that? Where do you look for the red flags? Where do you look for what's missing? And so if a buyer's agent cannot demonstrate to you what their due diligence process is, including their pricing research, and cannot surprise you with the things that they look for, then I would run a mile. So
Mm.
they're the 3 things.
Yeah, thanks very much. Yeah, I mean, you and I probably see it. There's buyers agents have significant waiting lists and can charge some good coin. Uh, how does someone know that the buyers agents have got boots on the ground or they've physically inspected properties? What are they looking for to go? I understand that you've done accurate due diligence, and I know that you've done a detailed property inspection of this particular investment as well.
I'd want to see evidence. I'd want to see, can you show me examples of what you've provided your clients before they bought a property? And then the question that's really important is to say, give me an example of when you've changed your recommendation on a property. When have you actually turned around and said, now I've discovered something, I don't think you should buy it? Now, there are some buyers agents out there that would never have that conversation with their clients because they're really selling,
Mm.
and they're trying to get you to and also a lot of them, particularly the ones with waiting lists, they're great at marketing. They're fantastic at marketing their pitch, right? And it's a sausage factory for them. They've just got to churn. They've got to get transactions done so they can get that conveyor belt of new clients coming through. And hats off to them for creating a fantastic business,
Mm.
right? But the outcomes for their clients are not so fantastic.
Yeah,
And they won't know, though, for a good 5 to 10 years. That's a scary thing.
that is the scary part, because effectively you're buying now with a buy and wait approach. 5 years comes out in a wash, and you're saying we go through cycles. So at what point in that cycle are you buying? So from your perspective, if someone's looking for and data driven, it gets thrown around a lot as a keyword. So to me, I'm like, I kind of put that to the side. But what resources, what information, where are you looking at? You go, if you're trying to make a good decision about where we are in this property cycle, is it Matusik? Is it CoreLogic? Where are you kind of dipping your company ink in to go, this is where you should be from a research perspective? These are the gold standard.
Okay, so I have a bit of a different approach to using data when it comes to property. Okay. In my buyer's agency business, we focus on the areas that we know, right? So we do eastern suburbs, inner west, lower north shore of Sydney, so 10K radius of the CBD. Now, we know that if somebody can afford a good quality investment property in those areas, we know where to direct their attention and what to look for, because we have been around for a long time, and over a long period of time, we've seen the assets that continue to perform well. And really, it comes down to what type of asset will generate competition from buyers in a flat market, because that's what will people compete for when the tide's out, right? Because there are certain types of properties that people will compete for when it's a buyer's market, right? Because they're scarce assets, they're good assets. They don't have to be particularly expensive per se. It doesn't have to be harbourfront, but it does have to be in every market. There are these good assets that people will prioritise when they've got lots of choice. And so that's the fundamental of it, right? So I don't need data for that because we've got years of experience, but we also have case studies and benchmarking, and I've developed a methodology over the years of scoring every property that we go for based on a set number of criteria that we know feed into capital growth over time. So that's because we know our area, right? But I couldn't necessarily take those same criteria and plonk them in Brisbane, for example, because there's different market dynamics up there. So if we had a client that had a budget that could not buy an A-grade asset in Sydney, but could buy one in potentially Brisbane or Adelaide, maybe Melbourne now, Melbourne's in the doldrums, I would actually talk to those clients and say, you know what, I want to introduce you to a buyer's agent of equal caliber in each of those cities, and you have a conversation with them as to what an A-grade asset looks like for your budget in those cities. So I don't need data to work out where to point people's attention. What I'm saying is I want to, any of these sort of places, the right asset could be a great investment over time, knowing that we're not looking at what the whole market does. We're picking one asset, one, right? The whole market could be in the doldrums and you can still get higher level of competition on one property that oversells and is like the outlier. You know what I mean? You want that type of asset. And in all markets at all times, you can be looking for that type of asset. But also property, in my view, is a long game. So whilst you got some properties that have got, they're having a shot up at the moment. I mean, certainly you look at Brisbane, Adelaide and Perth at the moment, massive growth, but there's periods of time, particularly in Brisbane and Perth, decade of nothing, Melbourne's having a time in the slump, but if you buy a right asset and give it enough time, you're going to be fine with whatever it is you buy. So we use data, obviously, when we're assessing properties and when we're doing price research and all that sort of stuff, and we use both Pricefinder and CoreLogic. One of the websites I quite like, I love, is Suburb Trends as well, Kent Lardner's website, because there's an interesting thing that I love in there that he introduced me to some years ago, which is the price segmentation tool. And this is really about, once again, understanding your local market. People look at these macro figures for a market. What they don't realize is that there's different price segments within a market, And so understanding the dynamics, so there's different price segments, the types of properties and the types of buyers and all that sort of stuff, and how big that segment is, though they're important factors in understanding a market. So there's so I don't have this sort of, this is my go-to for data. The data has its place in assessing an area and assessing a particular property, but you've got to sort of know what you're trying to find out and where to go to find that information.
Cool. Does Melbourne surprise you, its current level of performance?
Yeah, it does actually.
Because I guess I'll preface that by saying, Melbourne is tipped to exceed Sydney for population growth over the next 10 years. I mean, I had Bernard Sollitt, on a webinar recently, and I'm surprised. Sorry.
Well, I mean, but that's a great example, because people sort of looked at population as being sort of one of the key metrics to choosing to buy in an area, right? Okay. And look at COVID, look at 2021. Sydney's population fell, and yet we had huge growth, huge price growth. So then you go, oh, that's interesting. The population fell. There was huge migration, often, mostly to Brisbane, to the Sunshine State. And Brisbane's growth, correct me if I'm wrong, I don't have the data in front of me, but I think Brisbane didn't grow quite as much in 2021 as Sydney did, right? Yeah, lag. Now Brisbane's having its day in the sun. Sydney's still growing, but at a much more subdued rate. Melbourne's, really floundering. It's sitting almost breaking even every month at the moment. So interestingly enough, so therefore, if you look at just population, you've got to go, well, that doesn't make sense, does it? Also, Melbourne doesn't have geographical constraints that actually both Brisbane and Sydney, for that matter, do have these constraints, So Melbourne can keep developing, and I often joke it's going to be merged with Adelaide soon, merge with Albury. Melbourne, so geographically, and you're also in Melbourne, you've got two cities, you've got Geelong and Ballarat that are within an hour's commute, really.
Mm.
And so they become more credible options for some people to live in than, say, the outskirts of Melbourne, which as the crow flies, might be closer. But if you want to commute, is actually more difficult because they
Mm.
don't have the infrastructure. So there's lots of things going on in the Melbourne market, I guess. And also you've got government and doing sort of fairly strange things
Yeah.
at the moment down there, and it doesn't seem to be particularly friendly to property ownership at all, to be quite
Correct.
frank.
Yeah, correct. It's really throwing a lot of investors, putting them off a little bit at the moment. But I mean, you're seeing that is this the opportunity when the market zigs, do you zag? And they're looking at it and feel like it'll
Look,
turn. Just
if
the
I
time between.
yeah, and look, if I was younger, I mean, I'm at the stage of life now where I'm sort of consolidating. I'm actually investing in other things outside property.
Yeah.
Um, but if I was younger and had that runway, I would
Mm.
absolutely be looking at Melbourne, and I would be looking at this as an opportunity, and I'd be looking at the sorts of areas that I like to invest in Sydney, which is those inner ring suburbs
Mm.
where you got that lifestyle, that period homes, the real gentrification, you got great access to the city, blah, 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 blah. Um,
Yeah.
you know, they stand the test of times, those locations. And yes, the whole place is a bit slumped at the moment, but I wouldn't think that's going to last forever.
Yeah. I mean, you've had a lot of guests on Elephant in the Room, for example, and housing affordability is a topic that comes up time and time again. It's not asking for your opinion, but for the younger Australians that are trying to get into the market, what's your advice to them? Because they're just feeling like they're being pushed out. HECS really impacts borrowing capacity. Bank of Mum and Dad is available to some, not all, and they need their incomes to be close to Sydney for work, for example. What's your say to them when they're feeling a little bit despondent?
Well, as you probably know, one of my other businesses is Home Buyer Academy. We have
Yeah.
another podcast called Your First Home Buyer Guide. I have a real passion for helping first home buyers not just get into the market, but get in well, get in safely, right? Now, the Bank of Mum and Dad, it's well publicised to be the 5th largest lender now. So, and obviously that encourages privilege to stay where privilege is, right? So, and so for those people who don't have access to that support, what do you do? Now, really and truly, I think that there are some government initiatives that really help you, and I actually don't mind the shared equity schemes for the right candidate and for the right circumstances. So, for example, if you can utilise government shared equity scheme to get into the market and buy a family home that you would otherwise have to, use the stepping stone strategy, buy small and keep renovate and whatever and trade up and all the rest of it. If you can actually circumvent a lot of that and get in at a larger asset that you can actually be in for a long period of time, I get that you're going to sacrifice some of your capital growth back to the government, right? One of these days you're going to have to pay it back. And I get that there's some sort of sense of, I don't want to live in a home that the government part owns or whatever. But look, I think it's a great opportunity for some buyers to look who don't have help in any other way, rather than go and buying off the plan or taking government incentives to try to, buy brand new, and actually buying an asset that has a good chance of not going up in value for some time, and actually you've been trapped on the lower rung on the ladder. There's an absolute case for looking at that very seriously as an opportunity. And so the other thing too that I would say is that there's a lot of negativity around about, woe is me, it's all unfair, et cetera, et cetera, et cetera. Like, I literally just interviewed one of our students in Home Buyer Academy yesterday. Now, she's a single mum who had actually, like, years and years and years, like 20 years ago, bought her first property, but then after 5 years, relationship breakdown, and hadn't owned since, right? She took advantage of the government's 2% single parent guarantee deposit guarantee. They keep changing the names and I never remember what they're called. She took advantage of that. That motivated her to actually start saving, and she ended up with 7%. she did our course, so she bought with confidence after, and then recognized some of the mistakes she'd made first time around as well. But there is somebody that has actually taken that. She's obviously got the income to support that. Let's face it, but she's knuckled down and realized it's possible because of that. Right now, before that, she said, "Look, I've always wanted to buy again, but like I just never thought it was possible." That gave her the impetus to really get those good savings habits in place, and to make that commitment. And once she made that commitment, then that made it easier for her to actually follow through on that. And so that's an inspiration for anyone who thinks it's too late, or I can't do it, or it's too hard. You got to do some hard work, right? But there are some government supports there that I think are really useful and helpful for certain people. So I guess we have to look at our mindset, and we have to look at whether we're just going to be defeated by the fact is, yes, it is expensive. Like, I'm not denying anything here. I'm not, but you know, we can become victims to that, or we can say, okay, what can we do? And what am I prepared to do to actually get in and make good decisions and do this? And I think for those who have that mindset and that approach, it is possible.
Yeah, love it. And that's what we say. Home buying is an attitude. Do your research, like your podcast, the course, for example, all tools on your tool belt to help upskill you, get you to that next level. But ultimately, the property market rewards action takers and decision makers. At some point, you've got to get in there, and we're pretty much trying to, like you, get more confident buyers in the market, get them surrounded with the right team, right advice, and your future self will thank you for it. So, Veronica, I want to say thank you very much for sharing your knowledge, your insights. If you want to get in touch, I know you've got if you're headed to auction, check out Veronica's book, Auction Ready. If you're a first-time buyer, then check out your course and the podcast as well. It comes with it. It's a great resource. And then if you're, again, wanting to tap into more market knowledge and insights, the Elephant in the Room podcast is absolutely gold standard as well. So kudos to you, mate. Well done. Keeping yourself very, very busy.
I know sometimes I look back there, how do I do it all? I do, and I enjoy it. But I will say, if anyone wants a one-stop shop to get access to any of those things, just go to veronicamorgan.com.au. It can funnel you in whatever direction you need to go to. But look, I'm all about helping people make better property decisions, and there's a lot of advice out there. Everyone's got an opinion. And it's overwhelming at times for people. So if you want no BS, then just sort of head my way, I guess.
That's what we got on here, that real values alignment. It's just like that's exactly what we want. So I say we're agnostic to whoever you use. Make sure you use a great professional, and that cream really rises to the top. And Veronica, you certainly fit that mold. So, mate, well done.
Thank you very much. Nice chatting.
You too. Hey, if you've loved this episode, we say, look, don't worry about the reviews or the likes, subscribes, mate. We want people to share this. So if you know someone that's going to auction, if you know someone that's trying to get into the market, for example, or very curious about engaging a buyer's agent, share this episode with them. And that's the way we can kind of have that bigger ripple effect, which is what we're all about. So that's a wrap for another episode of the Australian Property Investment Podcast. We'll talk to you soon.